Wall Street is bracing for an absolute meltdown in private credit, and you should be bracing for this as well. The warning signs are all around, and it started with a string of companies that collapsed last fall. Companies that dealt in private credit like Blue Owl and others are taking the brunt of this hit. But if you've ever heard the term, by the time it is in the news, it's too late, nothing could be more true than what's happening right now. And you're going to experience this. You're going to see it because by the time it's in the media, and I'm going to reference an article out of CNBC, and it's entitled Wall Street Bracing for a Private Credit Meltdown, the risk of one is now rising. The reason why it's important is because the people in the know already know this is going on, and they've already left. They've already exited stage right. And that's why the media can pick it up and run with the story, because it's already well known on Wall Street, but Main Street doesn't know what's going on. I'll give you an example. Let's say you have an asset, a stock, whatever stock it is, and there's trouble brewing, but you don't know about it yet. And the stock keeps rising. It just keeps rising. There's a couple different ways that stock can rise. First, if there are more buyers than sellers, it just rises, right? Another way could be through a straight manipulation. And what a lot of people don't realize is that when stocks start to tank, it's because you immediately have a disappearance of buyers, right? But there's also something else that happens. And it's really hard to wake people up in this. They look at the price and they think the price dictates the value. But it's the volume of the stock, the crypto, the bond is what people need to watch. A healthy market has good volume and stable prices, either trending slowly up or sideways, but solid volume, right? In the lack of news or information about that company. I'm trying to break this down really simply. Then what happens is all of a sudden there is not even a ton of buyers or what I'm saying, a ton of sellers out there pushing something down. It's just that there's so few buyers, the sellers start to outweigh the buying activity and the price starts to fall. And it starts to fall fast. Well, private credit is growing so fast after the financial meltdown of the 2008 recession. It's growing so fast. It's saying right here, the growth right now, they're looking at 3.4 trillion in the year 2025 to an estimated 4.9 trillion by 2029. And these September bankruptcies of the auto industries like Tricolor, which is massive, and First Brands have emboldened some prominent Wall Street figures to raise alarms about the asset class. Now, if you remember back in, November or October, after the October 10th meltdown of the stock market and the crypto market, I said that I was expecting bad news to be coming out by the second week of January. And there really hasn't been. To be honest with you, I'm quite shocked that earnings has not dictated a lot of this, but there are a lot of these companies that don't have to publicly remark on their earnings because they're not public. But these large like Blue Owl and stuff, you're going to start seeing more and more information come out. But what's interesting is how these companies that are enemies, right, have started joining forces because they know how big of a deal this is. It says here, after investment bank Jefferies, JP Morgan, and Fifth Third disclosed losses tied to the auto industry bankruptcies in the fall, investors learned the extent of this form of lending. Bank loans to non-depository financial institutions reached 1.14 trillion last year. On January 13th, JP Morgan disclosed for the first time its lending to non-bank financial firms as a part of its fourth quarter earnings presentation. Now, how important that is, it's actually incredibly important. It showed that you had the largest bank in the country was now exposed to a non-bank because part of their portfolio was being lent out to a non-bank that was lending money to very risky companies. Now that's sucked in the big banks. Now, at the same time, we're seeing the Federal Reserve that is out there going, hey, we're injecting liquidity. We're making everything nice, everything peaceful. But that's a bad thing. There are people that cheered it But they don't even know how bad of a deal it is, because during the great financial crisis, the Great Recession, it wasn't until January of 2009, 4 months after Lehman Brothers imploded. And there was so many other issues for years before that, that the Fed started to inject liquidity by becoming the lender of last resort to the banks, because the overnight lending rate was spiking. This also happened in 2019, a month before COVID came out of China. See, the Federal Reserve and these large banks, they watch social media too. They could pick up on people in the know that are sounding the alarms on social media, saying, hey, look, this lending rate is spiking, or hey, watch this, there's some issues over here. And they are culling things ahead of time. And one way the Fed did that was just start to lend money overnight to banks, because the other banks wouldn't trust the other. Each bank wasn't trusting each other. So I wanted to bring this out because I think it's really important that we wake up to the facts. And just so you know, that when a credit meltdown happens, stocks sell off rapidly, because a lot of companies have less access to credit. And that also takes down your gold and silver price, your Bitcoin price, and all of that stuff. Okay, because everything is leveraged in one way or another. And like everyone knows, it's not the physical demand in gold and silver that are running the prices like they did in 2021, around that era. It's all paper contracts from another country that are doing it. You got to start thinking about what's happening there. Why did India's prices drop so rapidly in silver the other night? It's going to be interesting coming up pretty soon. And that's why you always want to have some cash on the side. All the gold and silver people will hate hearing that, but that is true. Cash is always king during a crash. And we're going to find out pretty quick here. All right, with that being said, the Economic Ninja is out.